Ladies and gentlemen, let me share with you a timeless truth. Money is a tool. It's not about how much money you make, but how smartly you make your money work for you. You see, many people work hard for their money, but few ever make their money work hard for them. That's the difference between financial struggle and financial freedom. The secret lies in your understanding and your actions. First, you must commit to educating yourself. Financial knowledge is the foundation of wealth. Without it, money slips through your fingers like water. The more you learn about money, the more control you have over it, and control is the pathway to freedom. Next, shift your mindset. Instead of fearing you don't have enough, believe that opportunities abound. The wealthy see money not as something to hoard, but as something to grow. When you change how you see money, you change how money moves in your life. Now pay close attention to what you buy and invest in. Are those purchases assets or liabilities? Assets put money into your pocket. Rental properties, stocks, business. Liabilities take money out. That fancy car, high interest debt, or costly habits. Build a portfolio of assets. This is how you make your money work while you sleep. Remember, it's not about quick riches. It's about small, consistent steps. Start today, no matter how small the amount. Over time, thanks to the power of compound interest, your money multiplies. The key is patience and consistency. Don't depend on one paycheck. Diversify your income streams. Let your money create money. Dividends, interest, royalties. This isn't just smart, it's necessary. And finally, discipline yourself. Budget your spending. Live below your means and free up capital for investing. Wealth never comes from careless spending, but from thoughtful, deliberate choices. So start today. Make a plan. Educate yourself. Invest wisely, and let your money work for you. Because when your money works for you, you don't just build wealth, you build a legacy. The very foundation of making your money work for you begins with understanding the value of financial education. Money in and of itself is just paper, metal, or numbers on a screen. But knowledge about money, that's power. The truth is, the difference between those who struggle financially and those who succeed isn't always about how much money they make. It's about how much they know, and more importantly, how they apply what they know. You see, most people spend their lives working hard for money without ever learning how money actually works. They earn a paycheck, pay their bills, and maybe put a little aside if they can. But they don't understand the underlying principles that govern money's movement, principles that have been consistent throughout history and across every economy. Without this understanding, your money will never truly work for you. Instead, you'll find yourself working harder and harder just to keep up. Financial education is not about complex jargon or complicated formulas. It's about grasping simple, practical truths that can be applied immediately. For example, understanding the difference between income and wealth is crucial. Income is the money you earn each week or month, but wealth is the collection of assets you own that generate money for you continuously. If you focus only on increasing your income, you'll eventually hit a ceiling. There's only so much you can earn by trading your time and labor. But if you focus on building and acquiring assets, your money starts to multiply and work for you, no longer tied to your immediate effort. This is why financial education is the cornerstone of wealth building. It equips you with the tools to make informed decisions. When you know how interest compounds, when you understand how investments grow over time, and when you learn to identify opportunities versus distractions, you position yourself to take control of your financial future. Without this knowledge, your money becomes vulnerable to poor choices, bad advice, and lost opportunities. It's important to remember that financial education isn't a one-time event. It's a lifelong journey. The world of money and investing is always evolving. New financial products emerge, markets change, economies shift. Staying informed and continuously learning is your greatest defense against uncertainty and your greatest advantage in building wealth. The power of financial education also lies in how it changes your attitude toward money. When you're uneducated, money can seem like a scarce resource, something to fear or hoard. But with knowledge comes confidence. You begin to see money as a tool, an ally that, when handled correctly, can open doors and create possibility. You stop living paycheck to paycheck because you understand how to make your money work smarter. Many people think they need a large amount of money to get started investing or building wealth. But financial education teaches you otherwise. It shows you how even small amounts, when invested wisely, can grow over time, thanks to compound interest. You don't need to wait until you're wealthy to start. You need to start now, no matter how small the amount. Education empowers you to make that first step and keep moving forward. Another vital aspect of financial education is learning to differentiate between good debt and bad debt. Debt often gets a bad reputation, but not all debt is harmful. Smart borrowing for assets that appreciate in value or generate income can actually accelerate your path to wealth. On the other hand, borrowing for liabilities that depreciate or don't generate returns can trap you in a cycle of financial struggle. Knowing this difference is key, and it comes from education. Moreover, understanding taxes, inflation, and risk management are critical parts of your financial education. Inflation quietly erodes the purchasing power of your money over time, so knowing how to invest in assets that outpace inflation protects your wealth. Taxes take a portion of your earnings, so understanding how to legally minimize tax liability through smart investing and planning means you keep more of what you earn. One of the greatest lessons in financial education is the idea of delayed gratification. It's easy to want instant rewards and quick returns, but wealth rarely builds overnight. The educated investor knows that patience is a virtue, and that the greatest financial rewards come to those who plant seeds today and nurture them for years. This mindset separates the financially successful from the financially stressed. In short, financial education gives you the map and compass to navigate the complex world of money. It's the difference between wandering aimlessly and walking with purpose. When you commit to learning about money, you open the door to a future where your money works for you, growing, multiplying, and supporting the life you desire. Without it, you may work harder, but your money will never truly serve you. So the first and most important step in your journey to financial freedom is to invest in yourself through education. Read books, attend seminars, listen to experts, and most importantly, apply what you learn. Remember, money is a good servant, but a bad master. The more you educate yourself, the better you become at making money your servant. That's the real secret to making your money work for you. When it comes to making your money work for you, everything begins with your mindset. The way you think about money, wealth, and opportunities plays a monumental role in shaping your financial future. One of the most powerful shifts you can make is moving from a mindset of scarcity to a mindset of abundance. This shift isn't just a feel-good idea or vague philosophy. It's a fundamental change that impacts every financial decision you make and every opportunity you see. A scarcity mindset is rooted in fear. It's the belief that there isn't enough money, enough opportunities, or enough success to go around. When you operate from this perspective, you focus on what you don't have, what you might lose, and what's missing in your life. You become anxious about spending, overly cautious about investing, and doubtful about your ability to create wealth. This kind of thinking creates a mental barrier that limits your actions and your results. In contrast, an abundance mindset is grounded in confidence and possibility. It's the belief that there is plenty of money and opportunity available, not just for a lucky few, but for anyone willing to learn, work hard, and take smart risks. When you think abundantly, you see money as a resource that can be multiplied, shared, and grown. This mindset encourages you to invest, to take chances on your own ideas, and to look for ways to create value for yourself and others. Why does this matter? Because your thoughts shape your behaviors, and your behaviors shape your financial outcome. If you constantly worry about losing money, you might never invest. If you believe wealth is only for other people, you might never try to build it yourself. But when you embrace abundance, you open yourself to possibilities you may have never considered. You start to see opportunities where others see obstacles. Adopting an abundance mindset doesn't mean ignoring reality or pretending that money problems don't exist. It means choosing to focus on what you can control and what you can create. It means believing that setbacks are temporary and that with effort and persistence, your financial situation can improve. This optimism fuels action, and action leads to results. The mindset of abundance also encourages generosity and collaboration. When you believe there is enough to go around, you're more likely to share knowledge, partner with others, and support people around you. This creates a network of opportunity that benefits everyone involved. On the other hand, scarcity breeds competition, secrecy, and isolation. When you think abundantly, your money not only works for you, but can also create value for others, which often comes back to you in unexpected ways. One practical way to cultivate an abundance mindset is to reframe how you view money. Instead of thinking about money as something to hoard or protect, think about it as a tool that can be used to build a better life, to invest in your future, and to help others. This shift changes how you handle your finance. You become more willing to invest in yourself through education, more open to taking calculated risks, and more patient with the long-term process of building wealth. Another key element of abundance thinking is gratitude. When you appreciate what you have, you naturally attract more. Gratitude shifts your focus from scarcity, what you lack, to abundance, what you already possess. This positive focus creates a cycle of attracting more good things into your life, including financial opportunity. Also, practicing abundance means embracing the idea that your success doesn't come at the expense of others. There's no zero-sum game when it comes to money and wealth. Just because someone else succeeds doesn't mean you fail. Understanding this helps you celebrate others' successes and learn from them, rather than feeling threatened or jealous. Developing an abundance mindset is a process. It requires self-awareness and intentional effort. You have to catch yourself when scarcity thinking creeps in, when you feel limited by money, fearful of spending, or doubtful of your financial future, and consciously choose to think differently. This might mean affirmations, visualization, or surrounding yourself with positive influences who believe in abundance. Remember, your mindset is the foundation for your financial life. If your thinking is narrow and fearful, your money will be trapped in the same limitation. But if your mindset is open and confident, your money will follow suit. Your money will begin to work for you, multiplying and creating new opportunities, because your mind is ready to receive and act on those opportunities. The great Jim Rohn often said, "Don't wish it were easier, wish you were better." In financial terms, don't wish for more money without first working on your mindset. Build your mental capacity to handle and grow wealth. Train your mind to think abundantly about money, about opportunity, and about your own ability to succeed. This mental growth will translate into financial growth. In conclusion, developing an abundance mindset is not just a nice idea, it's a necessary step in your journey to financial freedom. It changes your relationship with money from one of fear and limitation to one of confidence and possibility. It opens doors to investments, partnerships, and opportunities you might otherwise miss. It encourages you to be generous, to learn continuously, and to believe that wealth is available to anyone willing to take responsibility for their financial future. Start today by examining your thoughts about money. Are they rooted in fear or faith? Are you focusing on scarcity or abundance? The answers to these questions will determine how your money works for you tomorrow. Shift your mindset, and you shift your financial destiny. One of the most fundamental lessons you must grasp, if you want to make your money work for you, is the difference between assets and liabilities. This distinction is not just accounting jargon or something for financial experts to worry about. It is a mindset, a way of looking at every dollar you earn and spend that can either build your wealth or slowly drain it away. Understanding this difference is the key that unlocks the door to financial freedom. An asset, simply put, is something that puts money into your pocket. It's an investment, a resource, or a tool that generates income or appreciates in value over time. Assets work for you, even when you're not actively working. They could be rental properties, stocks, bonds, businesses, or intellectual property like royalties from a book or a patent. The hallmark of an asset is that it creates cash flow or increases in value, contributing to your net worth and financial security. A liability, on the other hand, is something that takes money out of your pocket. It's an expense, a debt, or a cost that drains your resources without giving anything back. Liabilities can include things like car loans, credit card debt, expensive consumer goods that depreciate, or a mortgage on a property that doesn't produce income. While some liabilities may seem necessary or unavoidable, the danger lies in accumulating liabilities that don't contribute to your financial growth. Many people live their lives confused about this difference, and it often leads to financial struggle. They buy things they think are assets, but are actually liabilities. For example, buying an expensive car on credit may feel like a status symbol, but unless that car is part of a business or income-producing activity, it's a liability. It costs money to maintain, insure, and depreciates in value. The same goes for a large home purchased beyond one's means without generating rental income. It's a liability that consumes cash flow. The first step to making your money work for you is to develop the discipline to identify and accumulate real assets. This requires shifting your mindset from consumption to investment. It means thinking critically before you spend money. Ask yourself, will this put money in my pocket, or will it take money out? If the answer is the latter, it's a liability, and you should be cautious. Building assets is a process that often starts small but compounds over time. You don't need to buy a mansion or a private jet to build wealth. You can start with small investments like stocks, bonds, or a side business. These assets, even if modest, generate income that you can reinvest, and over time, your financial base grows stronger and more self-sustaining. The power of assets is best illustrated through the concept of cash flow. Positive cash flow means money is coming in regularly and consistently, whether it's from dividends, rental payments, or profits from a business. When your assets generate enough cash flow to cover your living expenses, you reach financial independence. This is when your money truly works for you, giving you freedom and choice. It's also important to understand that some liabilities can be transformed into assets if managed properly. For instance, taking out a loan to invest in a business that generates profit can be a smart use of debt. However, this requires careful planning and financial education to avoid falling into debt traps. The key is leverage, using borrowed money to increase your investment returns, but always with a clear strategy and risk management. On the flip side, accumulating liabilities without increasing your assets leads to financial strain. Credit card debt, excessive loans, and unnecessary spending can trap you in a cycle of paying interest and fees. This cycle reduces your ability to invest and build wealth, forcing you to work harder just to maintain your lifestyle. Understanding this keeps you vigilant and helps you avoid common financial pitfalls. Another important aspect is that assets often grow in value over time. Real estate and stocks, for example, tend to appreciate, meaning their worth increases. This appreciation adds to your net worth, which is the total value of your assets minus liability. A healthy net worth means you own more than you owe, and this balance is critical for long-term financial success. In contrast, liabilities rarely appreciate. Cars lose value the moment they're driven off the lot. Electronics become outdated, and loans accumulate interest. When you focus on increasing your assets and minimizing liabilities, you're essentially building a financial fortress, one that can weather economic storms and provide security for your future. Financial experts often say, don't work for money, have money work for you. This advice is rooted in the principle of assets and liabilities. Working for money means trading your time for income. Making money work for you means creating or acquiring assets that generate income independently of your direct effort. Jim Rohn used to say, learn to work harder on yourself than you do on your job. This means investing in your financial education and developing the discipline to accumulate assets and reduce liability. The discipline to save, invest wisely, and resist impulsive spending creates a financial cushion that grows over time. In conclusion, understanding the difference between assets and liabilities is not just a technical detail, it's the foundation of your financial future. Focus on building assets that generate income and appreciate in value. Be cautious with liabilities that drain your resources. This simple but profound shift will transform how your money behaves and bring you closer to financial freedom. When you know the difference and act accordingly, your money doesn't just sit idle. It works hard for you. When it comes to making your money work for you, one of the most important principles you must understand is the power of starting small, thinking big, and being consistent. Many people believe that wealth is only built through grand gestures, huge investments, or instant windfalls. But the reality is quite different. Wealth grows through small, smart, repeated actions over time. This is the secret that separates those who achieve financial independence from those who struggle for years. Starting small doesn't mean settling for less or thinking small. It means recognizing where you are right now with the resources you have at hand and taking the very first. You don't need a fortune to begin investing or building your financial future. Even the smallest amount saved or invested regularly can grow into significant wealth over time. The key is to start no matter how modest the beginning. The moment you decide to take control of your money and begin, you set a powerful process in motion. Think about the analogy of planting a seed. The seed itself might be tiny and seem insignificant, but with the right care and time, it grows into a towering tree. Your early financial actions are like planting that seed. Maybe you open a small savings account, buy your first stock, or start a side hustle. These actions might not seem to make a big difference right now, but they lay the groundwork for your financial future. Thinking big is about vision. It's about seeing beyond your current circumstances and imagining the life you want to create. Big thinking is what motivates you to keep going when progress feels slow or setbacks occur. Without a clear vision, it's easy to get discouraged or distracted by short-term challenges. But when you have a big, compelling goal, every small step becomes purposeful. You're not just saving money, you're building a future. You're not just investing, you're creating wealth that will support you and your family for generations. Consistency is the engine that drives your financial success. Wealth is rarely built overnight, and there are no shortcuts. The most successful investors, entrepreneurs, and savers are not the ones who make occasional huge bets, but the ones who commit to regular, disciplined action. Whether it's saving a fixed amount each month, reinvesting dividends, or consistently educating yourself about money, these steady habits compound over time. Consistency also builds momentum. Each positive action fuels the next. When you see your savings grow or your investments start earning returns, it motivates you to keep going. On the other hand, inconsistency leads to frustration and missed opportunities. Skipping months of saving or investing means losing the benefit of compound growth and falling behind. Many people underestimate the power of time in wealth building. Time is one of your greatest allies, but only if you use it wisely. Starting early, even with small amounts, allows your money to grow exponentially through compound interest. The longer your money has to work, the greater the rewards. Delaying your financial goals because you feel you don't have enough money today is a costly mistake. It's far better to start small and grow than to wait for the perfect moment that may never come. The combination of starting small, thinking big, and being consistent also teaches discipline and patience, two qualities essential for financial success. Discipline keeps you focused on your goals, preventing impulsive spending or rash decisions. Patience helps you stay committed during times when progress seems slow or when market fluctuations cause anxiety. Both qualities are cultivated by the habit of consistency. In the words of Jim Rohn, success is nothing more than a few simple disciplines practiced every day. This means that your financial journey is not about making complicated or risky moves, but about mastering simple, smart habits. Whether it's budgeting, saving, investing, or learning, the daily disciplines add up and lead to extraordinary results. Another important aspect of starting small is managing risk wisely. When you begin with modest investments or savings, you reduce the potential for large losses. This allows you to learn, adjust, and grow your financial knowledge and confidence gradually. As your knowledge and resources grow, you can increase your investments and take bigger steps with more assurance. It's also worth mentioning that starting small and being consistent is not limited to money alone. It applies to building skills, networks, and knowledge, all critical components of financial success. Investing in yourself through reading, taking courses, or networking with successful people contributes to your ability to spot opportunities and make wise financial decisions. These investments often have the highest returns of all. Many people delay starting because they feel overwhelmed or think they need to know everything before taking action. But the truth is, waiting for the perfect plan or perfect amount of money can keep you stuck indefinitely. Action breeds confidence and clarity. The sooner you start, the sooner you learn what works and what doesn't. To summarize, the pathway to making your money work for you starts with a simple step. Start where you are, with what you have. Think boldly about the possibilities ahead and commit to consistent, disciplined actions every day. Over time, those small steps accumulate into a powerful force that changes your financial life. Wealth is not a matter of luck or magic. It's the result of small, smart decisions repeated consistently with a clear vision. Remember, every financial giant started somewhere. The difference between the wealthy and the rest isn't just money. It's the decision to start, the courage to dream big, and the discipline to keep going. You have that power right now. Begin today, think big, and stay consistent. Your future self will thank you. One of the most important strategies to truly make your money work for you is to diversify your income streams. Relying solely on a single source of income, such as your job or business, is risky and limits your potential for financial growth. When you build multiple streams of income, you create financial stability, increase your earning potential, and open doors to new opportunities. This concept is a cornerstone of financial freedom, and understanding it can change the way you approach money forever. The first thing to understand is why relying on only one income source can be dangerous. Life is unpredictable. Jobs can be lost, businesses can slow down, and markets can shift. If all your financial resources depend on one paycheck, you're vulnerable to unexpected changes. Diversification spreads out your risk, so if one income source falters, others can keep you afloat. This doesn't just protect you from disaster. It also gives you peace of mind and greater control over your financial life. Diversifying income streams means creating multiple ways to earn money, ideally with different levels of effort and risk. Your primary job or business may be your main source of income, but it shouldn't be the only one. You could have rental properties generating passive rental income, investments paying dividends, royalties from creative work, or side businesses that provide additional cash flow. Each of these streams adds to your overall financial health and brings you closer to making your money truly work for you. One of the most powerful forms of income diversification is passive income. Passive income is money earned with minimal ongoing effort. Examples include rental income, interest from savings or bonds, dividends from stocks, and royalties from books or music. While setting up these streams often requires an initial effort, time, or money, once established, they generate cash flow without your direct involvement. This allows you to earn money even while you sleep or focus on other pursuits. However, not all income streams need to be passive. Active income streams such as freelance work, consulting, or a side business can provide valuable additional income while you build up your passive income source. The key is balance, combining active and passive income streams so that you have steady cash flow today while building financial freedom for tomorrow. Diversifying income also means diversifying your skills and knowledge. The more skills you acquire, the more opportunities you create to earn money. Learning new trades, exploring different industries, or developing entrepreneurial skills can open doors to income streams you might not have considered before. This approach not only increases your financial resilience, but also makes you more adaptable in a changing economy. It's important to understand that income diversification doesn't happen overnight. It requires planning, patience, and sometimes stepping out of your comfort zone. Start by identifying opportunities that fit your skills, interests, and resources. Maybe it's investing in dividend-paying stocks, starting a blog that can be monetized, or renting out a spare room in your home. Begin with one new income stream, learn from the experience, and then gradually add others. Many successful people recommend the 3 income streams rule. Aim to have at least 3 different sources of income. This provides a solid foundation for financial security and growth. It could be your job, a side business, an investment income, or if you're entrepreneurial, it could be multiple businesses and investments. The exact combination depends on your situation, but the principle remains the same. Don't put all your financial eggs in one basket. Diversifying income streams also has a psychological benefit. When you're not dependent on a single source of income, you feel less pressure and stress. You have more freedom to pursue your passions, take calculated risks, or even negotiate better terms at your job. This freedom is a crucial part of financial independence. Another key point is that diversifying income streams builds wealth faster. When you have multiple incomes coming in, you can save and invest more aggressively. Your ability to reinvest earnings from one stream into another creates a compounding effect that accelerates your financial growth. This cycle of income, saving and reinvesting is what separates average earners from true wealth builders. Of course, diversification must be balanced with focus. It's easy to get distracted trying to manage too many income streams at once. Start with what you can handle and scale gradually. The goal is to create sustainable, manageable income sources that work together, rather than spreading yourself too thin. It's also wise to continuously educate yourself about new opportunities and financial strategies. The economy, technology, and markets change, and new ways to earn money appear regularly. Staying informed and adaptable allows you to spot emerging trends and diversify your income in ways that others might miss. Jim Rohn often said, "Don't put all your eggs in one basket." This advice is timeless because it speaks to the heart of financial wisdom. Diversifying your income streams is a practical way to protect yourself, grow your wealth, and make your money work for you. It's about building a robust financial foundation that can support you through life's ups and downs. In conclusion, if you want to make your money work for you, focus on creating multiple income streams, balance active and passive income, invest in your skills, start small but plan big, and be patient and consistent. This strategy not only protects your financial future, but it accelerates your journey toward financial freedom. When your money comes from different sources, you gain freedom, security, and power over your financial destiny. One of the most crucial elements to making your money work for you is financial education. It is often said that knowledge is power, and when it comes to money, this couldn't be more true. Without the right understanding of how money works, how to manage it, and how to invest it wisely, you are more likely to struggle financially or miss out on opportunity. But with consistent learning and dedication to improving your financial literacy, you can change your financial future dramatically. Financial education isn't something you get once and forget. It is a lifelong journey of discovery, growth, and adaptation. The economy changes, markets shift, new investment opportunities arise, and laws and regulations evolve. To keep your money working for you, you must stay informed and adaptable. Continuous learning empowers you to make smarter decisions, avoid costly mistakes, and seize opportunities as they come. Many people assume that financial education is complicated or reserved only for experts. The truth is, anyone can learn the basics and apply them to their own life. It starts with understanding fundamental concepts like budgeting, saving, debt management, and the difference between assets and liabilities. Once you grasp these essentials, you can move on to more advanced topics like investing, tax strategies, retirement planning, and risk management. The more you learn, the more confident you become in handling your money. Confidence is a powerful asset. It reduces anxiety about financial decisions and encourages you to take thoughtful risks that can lead to growth. When you understand how compounding interest works, for example, you become motivated to start saving and investing earlier. When you learn about diversification, you can protect your portfolio from unnecessary risk. Education turns fear into action. Financial education also helps you identify and avoid common traps that keep many people stuck in a cycle of living paycheck to paycheck. You learn to recognize high-interest debt, unnecessary expenses, and risky investments that promise quick returns, but often result in loss. This knowledge protects you and helps you build a stable financial foundation. In addition, financial education opens your mind to new possibilities. It introduces you to different income streams, ways to leverage your skills, and strategies to build passive income. When you read about real estate investing, stock market fundamentals, or entrepreneurship, you begin to see opportunities that were invisible before. This expanded vision is essential for growing your wealth. One of the best habits you can develop is dedicating time regularly to financial learning. This might include reading books, listening to podcasts, attending seminars, or following trusted financial experts. Jim Rohn himself was a great believer in constant self-improvement. He said, "Formal education will make you a living. Self-education will make you a fortune." The difference is that formal education often stops at a certain point, but self-education never ends. Continuous learning also means adapting to changes in your personal life. As your income grows, your financial goals change. You might move from focusing on debt elimination to wealth accumulation, from saving for a home to planning for retirement. Each stage requires new knowledge and strategies. Staying engaged in learning ensures you're prepared for these transitions. It's important to approach financial education with a mindset of curiosity and humility. No matter how much you know, there is always more to learn. The markets and financial products are complex and evolving, and what worked yesterday might not be the best strategy tomorrow. Being open to new ideas and willing to adjust your approach keeps you ahead. Another benefit of continuous financial education is the ability to teach and inspire others. When you gain knowledge and experience, you can share it with family, friends, and your community. Teaching others reinforces your own understanding and creates a positive ripple effect. It builds networks of support and opportunity, which can be invaluable in your financial journey. Education also empowers you to work effectively with professionals like financial advisors, accountants, or lawyers. When you understand basic principles, you can ask better questions, evaluate advice critically, and make decisions that truly serve your interests. You avoid blindly trusting others and take ownership of your financial future. Jim Rohn emphasized the importance of reading and learning daily, saying, "Reading is essential for those who seek to rise above the ordinary." In today's world, information is more accessible than ever, but it's up to you to use it wisely. Prioritize financial education just as you would your physical health or career development. It's an investment in yourself that pays the highest dividend. In conclusion, financial education is not a luxury or an option. It's a necessity. It equips you with the tools, confidence, and vision to make your money work effectively. It helps you avoid mistakes, seize opportunities, and adapt to changes in the economic landscape in your personal life. By committing to continuous learning, you position yourself for long-term financial success and independence. Remember, the journey to financial freedom is not a sprint, but a marathon, and education is the fuel that keeps you going strong. Patience and perseverance are two of the most powerful qualities you can develop on your journey to making your money work for you. In a world that often glorifies instant success and quick fixes, these virtues might seem old-fashioned or even unnecessary. Yet if you look closely at anyone who has truly achieved financial freedom, you'll find that patience and perseverance were the backbone of their success. They understood that wealth is not created overnight, but built steadily, step by step, over time. When you start building wealth, it's easy to feel frustrated. The returns on your investments might seem slow. Your savings may grow more slowly than you'd like. The challenges and setbacks can sometimes feel overwhelming. This is where patience becomes essential. Patience is not just waiting passively. It's actively trusting the process and staying committed, even when immediate results are not visible. Patience allows you to avoid impulsive decisions that can derail your progress. In finance, quick decisions often lead to mistakes like panic selling during a market dip or rushing into get-rich-quick schemes that promise fast money but come with high risk. Instead, patient investors understand the value of staying the course, weathering the ups and downs, and letting their investments mature over time. This steady approach consistently produces better results. Perseverance goes hand in hand with patience. It means continuing to work hard, learn, invest even when faced with obstacles or slow progress. Perseverance is what keeps you saving money when it would be easier to spend it, keeps you educating yourself when it would be easier to ignore your finances, and keeps you building income streams when initial returns seem small. It's the grit to keep moving forward, regardless of setbacks. Many people give up too soon because they expect immediate results. They might start investing or a side business with high hopes, but when the money doesn't pour in right away, they lose motivation. The truth is, the most significant financial gains come to those who persist over years and decades. Success is a marathon, not a sprint. Jim Rohn often said, "Don't wish it were easier, wish you were better." This quote reminds us that challenges are part of the process. Instead of hoping for obstacles to disappear, we should develop the strength and resilience to overcome them. Each challenge you face builds your financial muscles and prepares you for greater success. The power of patience and perseverance also lies in compounding, not just of money, but of habits, knowledge, and relationships. The small savings you consistently put aside grow over time through compound interest. The financial knowledge you acquire builds on itself, helping you make wiser decisions as you go. The networks and connections you develop open doors to new opportunities. All of these compound to create a powerful force for financial growth. It's important to remember that setbacks and failures are inevitable. No one's financial journey is perfectly smooth. The key is not to be discouraged by mistakes or delays, but to learn from them and keep going. Each setback can be a valuable lesson that strengthens your resolve and improves your strategy. Another aspect of patience and perseverance is setting realistic expectations. Understand that building wealth takes time. The overnight success stories you hear about are often exceptions or the result of years of unseen effort. Set clear, achievable goals and track your progress regularly. Celebrate small wins along the way to keep your motivation alive. Having patience also means managing your emotions. Money decisions driven by fear, greed, or impatience often lead to poor outcomes. By cultivating emotional discipline, you can make calm, rational decisions that align with your long-term goals. This emotional control is developed through experience and conscious effort. In addition, perseverance requires discipline. It's about developing routines and habits that support your financial goals. This could mean regularly setting aside money to save or invest, continuing your financial education, or reviewing your budget. Over time, these habits become second nature, making perseverance easier to maintain. Surrounding yourself with supportive people can also bolster your patience and perseverance. Whether it's mentors, financial advisors, or a community of like-minded individuals, having encouragement and accountability helps you stay on track. Jim Rohn stressed the influence of your environment, saying, "You are the average of the 5 people you spend the most time with." Choose your circle wisely to foster persistence. Finally, remember that patience and perseverance are deeply connected to your mindset. Cultivating a positive, growth-oriented attitude makes it easier to stay committed. Believe in your ability to learn, adapt, and succeed. Visualize the financial freedom you're working toward, and let that vision fuel your persistence. In conclusion, patience and perseverance are not just helpful traits. They are essential for making your money work for you. Wealth building is a gradual process that requires time, effort, and resilience. By embracing these qualities, you position yourself to overcome obstacles, avoid costly mistakes, and stay focused on your long-term goals. Remember, the richest harvest often comes to those who patiently tend their fields and persevere through the seasons. Keep going, stay consistent, and trust that your efforts will bear fruit in due time.